Wow. All right. We are in Q4 already. This year is just flying by, and it has been a wild ride for many sectors of the economy. Arguably, real estate has actually been fairly stable, at least in our area. Because of that, I would always remind everyone there are a lot of articles out there talking about different things. Just make sure that that applies to us here in the Sacramento region, because things can be very different on a national, state, or local level. Like the video, please subscribe. I will continue to bring you as much information as I can to make sure you can make the most educated real estate decision possible, and do that with as much experience as possible. So before we get into all the details, I wanted to let everybody know about a new scam. Probably not a new scam, but it's new to me. So this one, folks are basically calling up. They are reading your social security number to you, but then they're asking you to repeat it back. Don't do that. Basically what they're trying to get is your voice, biometric data, you actually saying your own social security number, so that then they can go use that for other things, nefarious purposes. If you have a concern, hang up, call whatever company you think it is directly. Don't continue to talk to that person. And you know what? If you did accidentally hang up on the legitimate company, it's fine. They understand, and they'd probably rather you do that than potentially create a huge issue where they've lost money, you've lost money, everybody's upset. Also, just remember, the IRS will never call you. They will mail you repeatedly, but they will not call you. So if somebody calls from the IRS, hang up immediately. It's not the IRS. The other subcategory of this, watch out for anyone that starts asking you questions and then asks you to repeat that, so that again, they can get your voice saying yes. Is that a yes or a no? Yes. Well, now they record that and they have it to use for other things. So be careful. What else? So much happening. Now that we've talked about scams, let's dig into the market. The Fed cut their short-term rate by 0.25%, and we actually saw mortgage rates creep up a little bit after that. So they're still in the low sixes, which is great. And they've been trending down over the last few months. That's great. A lot of the projections are that the Fed will do 2 more 0.25% cuts this year. We'll see how that goes, and we'll have to see how mortgage rates respond. If the Fed does what everyone expects them to do, then there probably won't be as much movement. However, if the Fed does something that is unexpected, then we may see things change, and mortgage rates might compensate for that and move up or down. Overall, again, I would say if you're waiting for mortgage rates with a 3-point anything, 4-point anything, maybe even a low 5-point anything, don't hold your breath. I don't expect that to happen. If it does, that actually indicates that we probably have a lot bigger issues going on in the economy. We probably have a lot of unemployment, and we probably have some crazy inflation happening again, or a serious recession, and we need to ease up on the money supply. So we'll see what happens, but I wouldn't expect that. Nationally, for better or worse, we're actually seeing kind of flat housing data. Obviously, that varies state by state. Some states are having a really tough time. They have tons of inventory. Prices are coming down. Others are pretty solid, and they're actually seeing strong price appreciation. So just, again, be careful. Make sure you're looking at data that relates to your area. Nationally, averaged out, things are kind of flat. Volume is definitely down versus pre-pandemic or even pandemic numbers. And to give you a little bit of context, pre-pandemic, we're seeing anywhere between 5.75 million to 6.5-ish million sales per year. Obviously, 2021 got crazy. We saw a high of 6.89 million sales. And all these numbers do include both existing or resale homes and new construction. So right now, I would say nationally, we're seeing about a 25% drop in the sales volume over what it would normally be prior to the pandemic. So I would say of the shortfall, new construction is actually carrying a lot of the weight right now. We're seeing new construction do pretty well, although that is starting to falter a little bit. And then some really interesting information. The California affordability rate is actually about half of what the national average is. So national affordability rates, 34%, meaning that 34% of households are able to afford a median priced home in their area. California on average is at 17%. So not great at all. I remember years ago, I think in the toward the end of the housing crisis, when obviously prices were way down, I seem to remember seeing a high of somewhere in the high 60s to low 70s, meaning, high 60% to low 70% of households could afford a median priced home. So obviously we would love to see it above 50%, but that's not going to happen until we see some major changes. Let's talk about projections. Zillow. Sometimes I'm not the biggest fan of Zillow, but I will say in their defense, they are pretty good about keeping their data, or I should say their projections, their reports up to date. Their most recent, they are expecting that home prices are actually going to drop by just under 1% year over year. So 2025 overall, I think it was 0.9% in value reduction. They're also projecting just under 4.1 million sales. Now that's resale in existing homes only. That's not taking into account new construction. And that would really only be a 0.6, so less than 1% increase in sales numbers over 2024. So again, things are pretty flat. We're missing a lot of volume. It's just not there. And the good news overall, whether you want to call it flat or stable or stagnant, there's a lot of different words you can use, but that's kind of where we're at. On the rental side, because obviously that impacts everyone else that's not a homeowner, and it impacts the homeowners that are landlords. They are projecting a lower than average increase in rental rates this year, only 2.5%. So has its pros and cons. Obviously for renters, that's great news. They're dealing with a lot of other expenses, energy costs, grocery costs, childcare, everything else is up right now. So getting a little bit relief by their rental rates not increasing as much, great news. However, it's a little challenging for the landlords because repair costs, maintenance costs, some of their other insurance, property taxes, all those things continue to get more and more expensive. And that does create challenges for a lot of landlords. So again, it's just that push and pull, trying to figure out where the equilibrium is for that sector of the housing market. Another thing that I found very interesting was that although technically home values have increased, once adjusted for inflation, it actually lost value. Very interesting to me because we always think of assets as great places to park money, good hedge against inflation, but we have seen just so much inflation, and the dollar has lost so much value, 10% this year already. So I'm very curious to see where we end the year. That's not great, but the dollar has devalued so much that even some of those asset categories aren't really keeping up, which is really concerning. And that is part of the reason that gold has been on a tear. So for those of you that have not paid attention or haven't checked, over the last year, gold has skyrocketed. God, I think a year ago or so, it was around 2,200 an ounce. Right now it is over 4,000 an ounce for gold. So any of you that have gold in your portfolio or you're holding gold, congratulations. Huge win over the last year, even though it was doing nothing for the 10 years before that. Anyway, that's for a different market update. Let's dig into some local data. The quick summary, overall numbers are indicating a decent level of stability. I would say the trends are tracking pretty near to what we would normally see for each season. However, it is a soft market, very soft market. So homes are sitting on the market for a long time. Values are creating challenges for both buyers and sellers. Buyers, obviously want lower prices. Sellers aren't willing to budge on some things. And it's creating this, this chasm between the two where some sales just aren't getting put together. And some sellers are realizing they're too high and they're unrealistic. Some buyers are realizing that they're too low and they're unrealistic. I would say my advice right now, if you're a buyer or seller and you are actually committed to buying a house, be willing to negotiate and find a great agent. There are a lot of great agents in the area. I will say that. I am very proud of the Sacramento region being as involved as I am in our associations and our Placer County Grievance Committee. There are a lot of great agents here. So find one that knows how to negotiate, knows what to look for, and just knows how to help put a sale together. It's not always about price. There's a lot of other things that go into a sale. How fast can you close? How fast are you going to do inspections? Are you going to do inspections? What about a rent back? What if someone needs a shorter or longer sale? Don't be so focused on just the price. There are a lot of other terms that you can try and negotiate to make it a win-win on both sides. Another thing, we've been seeing a lot of articles about how high the inventory levels are, massive amount of inventories, all this inventory. Supply and demand dictates that if we have this much inventory, prices should drop. Yes and no. Again, sellers, they're not in distress. So even though a lot of sellers have come to the market and said, raised their hand and said, hey, I want to sell my house, they're not in distress, and a lot of them are not willing to take whatever a lower price is than they feel their home is worth. So while yes, we have seen, and locally, we have seen the highest levels of inventory that we have for the last 10 years. However, I was expecting, and it's happening, we're seeing a big pullback now that summer season and Q3 are over. We're starting to see a lot of inventory come off the market, and those rates are dropping. So again, a lot of sellers said, fine, I didn't get what I wanted. I'm going to wait. Either I'm going to rent the house out because I already bought something else, or I'm going to wait and hopefully in spring, things are a little bit better. Maybe in 2026, things are going to be better for the housing market. I'll try again then. It does create some challenges. And again, I would say seasonally, that's right where we should be. Inventory starts to drop heading into the holidays. If you're a buyer or a seller and you are committed to buying a house in the next 3 to 4 months, great news for you, because the party on the other side, if you're a buyer, the seller, if you're a seller, the buyer is going to be motivated. They're going to be serious if they're willing to do business during the holidays, during our rainy season, all that stuff. So it can be a really great time for buyers and sellers. If we dig into the data, for those of you that don't feel like hearing all the numbers, the summary is basically everything is pretty close to where we'd normally expect. However, the one thing that I noticed that was kind of breaking normal seasonal trends, homes are taking a lot longer to sell. So the average time on market is way up, more than what it would normally be. Everything else it's pretty normal. Our market's just really flat. For those of you that are interested, let's dig into the data. For the Tri-County area, the active homes for sale dropped by 3.7% from August to September. So again, we're starting that lower inventory trend for the holidays. Pendeds are up 2.9%, solds are up 1.3% in the Tri-County area. This renewed level of pending and sale activity could have been due to mortgage rates dropping a little bit over the last few months. So we'll just have to see how it goes once we get our October data at the end of the month. Days on market, this is what I was talking about. So the days on market increased 8.7% to 50 days for the Tri-County area, which is definitely higher than it normally is this time of year. List price to sales price ratio held stable at 96%. That's good news. Median sold price held stable month over month in the Tri-County area at $570,000. However, interestingly enough, that is actually $5,000 lower than it was for that month for September last year. So year over year, that 1 month did see a downward trend. Again, 1 month doesn't make a trend. So I do look at how is the whole month trending. We might be up next month. So we just have to look at that from a little bit higher level and see how things are trending. Like I said, they're all pretty close to where they should be, and we will see these month over month variations. Inventory levels, like I said, have started to taper off after hitting their 10-year high back in June. So we've seen a lot of inventory, but it is starting to taper off. So it dropped 7%. It's down to 2.7 months in the Tri-County area. And that's just more sellers, like I said, pulling their listings off the market. If they're not forced to a sale ahead of the holiday season, they'll say, you know what, try again next year. Placer County, moving pretty similarly, obviously, since that is a big piece of the Tri-County data. The number of homes for sale in Placer County dropped from August to September by 2.1%. Pendants increased 7.2% and sales were up 10.8% for the month of September in Placer County. That is really strong. So I have a feeling we're going to see a little bit of a drop off. Great start, or I should say great end to Q3 though. So the days on market in Placer County, same thing. We saw a 14.3% jump. That's up to 56 days, which is for September, that's about 40 to 45% higher, more time on market than would traditionally see for this month. So that really breaking outside of its normal trend. The list price to sale price ratio held stable also in Placer County at 96%. So some stability there. The median sold price in Placer County actually dropped 3.2%. It's down to $643,000. And again, that is slightly lower than the median sales price in September of last year, which was $645. So $645 down to $643 year over year. But again, We need to watch the trends, see how things come together. Inventory in Placer County is down from 3.2 months, that high we were talking about, down to 2.7 months. That was a 12.7% change. Pretty stable overall. We're kind of moving in those normal trends, but we are seeing things just really soft. My summary, my takeaway, I think the Sacramento area still has a lot of great potential. I think we're really strong here, but there are a lot of economic and housing industry challenges that are making it a little bit rough. And candidly, I just don't think we're going to see a lot of movement in our local housing market unless some major things change. We either need a lot higher average income, household income, we need rates to significantly drop, or we need the price of homes to significantly drop. And sadly, I don't see any of those three things happening. So we're just strap in, we're in for more of the same. So again, it all comes back to, do you have a great agent that can find you a really great deal in today's market? Other than that, you guys know how I feel about housing. It's great. It's a great place to build wealth, pay off debt, to have stability, to have security. If you make some improvements to the house, build that sweat equity, and some tax benefits. So there are some great things to that. Candidly, as a real estate agent, I will say this: if your housing cost is going to be $4,000 a month and you can rent something for $2,300 a month that is fairly similar, do that, and take the extra you'd be paying and put that into a savings account for down payment, put it into investments. Just be smart with it. So that's it for today. Thank you very much. That got a little long, but really appreciate those of you that stuck it out. I'll continue to bring you more information and keep you apprised on our local market, keep you educated. If you'd like a customized report like this for your zip code, for your neighborhood, or even for your specific home, let me know. I'd be glad to put that together. I love digging into the data. If you're a buyer and you want to put a strategy together to make sure you get the best deal and the best opportunity in today's market, we'll sit down, we'll talk about that. We'll go through your profile and figure out how to best maximize that for today's market, for pricing and for terms. So thanks again, everyone. I'll be back next month.